Welcome to the FMCG Guys, the podcast that dives into the innovation, strategy, and trends shaping consumer goods and retail in Europe and beyond.
Welcome to the FMCG Guys podcast. I'm your host, Daniel Torres. If this is the first time you tune in, you'll want to know we're the top consumer goods and retail podcast in Europe. It's not only me that says it, it's our over 250 episodes and 24,000 LinkedIn followers that can credit for that. And you can go back to our old episodes on our website, www.fmcgguys.com. And well, I said old, but they never get old really because they're always very relevant. Remember, we are part of a family of podcasts. We have a partner podcast in the US, the one and only CPG Guys podcast, 500 episodes in. So tune into their show if you want to know what's happening on the other side of the Atlantic, where Peter and Sri do an amazing job. And today I'm accompanied by two great people. First of all, Cristina Nicolaou, my dear co-host. I think it's the first time I see you since Shop Talk Europe, right?
Yes, right. Daniel, it's been quite a while since we recorded.
So how's life been? How did you enjoy hanging out with me at Shop Talk?
Shop Talk was an amazing experience, and I bet every one of the people who attended our events can say so. So we had lots of fun, yeah. And now back in a very, very hot summer in Greece.
Exactly. I feel like I didn't even hang out that much with you at Shop Talk. I think we were so busy.
You were a busy bee as always, yeah.
Well, we are. You were as well. I think we were busy catching up with all these people, and then we forgot to actually catch up with each other. But
and to be fair, it was also a great Shop Talk with regards to content and a lot of insights. So it was a lot of very valuable talks that we got to attend and great notes to bring back.
Well, kudos to Ben Miller and the whole Shop Talk team for putting up a great show. I can say also on the attendance side, it was very, very strong. So looking forward to a year minus a month from now for the next one. We're going to talk about one of your favorite topics today, Christine. I like it as well, but I think you have a personal affinity with it. We've only covered it a couple of times with a guest from Kraft Heinz and Bayer. I'll leave the links in the show notes, but this is pricing and revenue management. Why are you so keen to talk about this topic? Why do you think it's so relevant to FMCG these days?
Well, I would say actually my favorite topic is growth. And as part of growth, both of those elements are crucial. There was this chart that I sent you the other day, Daniel, I was looking at from Eurostat, where you were able to see the turnover and the volume growth of retail throughout the years. And it's very clear that there was like a clear algorithm that everybody was familiar with and trusted, with volume growing and then value following course. And all this just simply changed in COVID, where you have like this mess of lines going up and down. And since then, you see a volume that's kind of like struggling with pricing and with value through an inflationary environment, and pricing actually going through the roof. So I feel like in a lot of conversations that we find ourselves in this industry, it's one of the key topics, right? So how do we continue to drive growth in a healthy way? It's clear that we cannot just magically go back to the very smooth, if you want, equation that we're used to before. But we still need to find the ways now to rebalance, because affordability is really hitting our consumers, and because we're not talking only about one category. And there is only so much money in people's pockets, and they need to find a way to allocate it in an effective way. So it's really a challenge, both on retailer side as well as on brand side, to find a way to create a new algorithm, pulling different levers, and that's where RGM comes to play, to unlock growth, but also not only in value, but also on transaction side.
Yeah, I think it's something, that's the thing. I think that we hear a lot of flashy things in the world of FMCG, but I think it's these like deeply rooted factors or levers in the industry that really can move the needle a lot. But anyway, who am I to talk about it? Let's speak with our guest today, which actually it's his second visit to the podcast. He visited in January 2024. We were checking before, speaking about digital transformation. Today we're going to talk about a very different topic. And this is Mark Jagger. Hey, Mark, how are you?
Very well, Daniel. How are you doing?
Very good, very good. The last time I saw you was having lunch just down the road here in Barcelona. So now in a different setup.
Yeah, a little bit colder where I am. So I'm not enjoying the sunny Greek or Spanish weather right now in Sao Paulo. It's about 10 degrees. So a bit chilly. And Christine, I think I can go home because I think you've just covered all of my points.
Okay, I'm glad that I said this in the right way.
So this was another episode of the FMCG Guys. Thanks for tuning in. No, I'm joking. So Mark, you visited us January 2024 when you were working at Sanofi. What's changed in your life since then?
Well, quite a lot actually. So managed to leave Sanofi back in October last year. And since then I've set up my own consultancy practice based here in Sao Paulo. Very much focused a little bit on what we spoke about last time around digital let's say transformation, but very much focused on the RGM side of that and how we can use data a lot more effectively to identify those growth opportunities that Christine spoke about. So yeah, a lot's changed. Have a kid as well, so that's also something that's different. But very much running my own business right now and trying to help companies really get back to growth and get back to that sort of more sustainable model that Christine spoke about.
And briefly, because I don't think we covered that on the other podcast, but anyhow, for anyone that's meeting you for the first time, could you briefly tell us a bit about your background? Because you've done a lot of work in FMCG, so I think it's very relevant.
Yeah, sure. So look, I think I've been very fortunate. I've managed to live all over the world in my career. So I started off at Procter in the UK. Very, very fortunate to work with Gillette and Tesco during the Olympics, which I can say was an absolutely incredible experience working on Gillette at that period of time. Worked with Reckitt in the Middle East, launching Strepsils and Nurofen there. And so I've kind of had that experience. And then after that, sort of various roles in commercial excellence, global sales roles, for Sanofi all over the world. So Japan, Australia, Russia, India, a ton of stories to tell, which probably are not for this podcast, but maybe a different one, or over a beer. And most recently at Sanofi as global head of commercial, and then now obviously my own business, trying to take that experience and really make action-led, growth-led plans for companies. So Procter, Reckitt, Sanofi OTC, really hopefully good schools for learning and growing in this space.
And you already have a lot of experience through your past career journey, but as well as now with your new endeavors, as you're speaking with a lot of companies as well, and you have also the global point of view. Could you give us your kind of view on what is the state of the industry? What is it that you are observing?
I think it's a challenging period, right? You sort of mentioned a little bit yourself, Christine. The market's in a bit of a transition phase, transitioning out of that regular pattern of solid volume growth with sort of pricing growth supporting profitability to during COVID or the last 3 or 4 years. I think around 70% of global growth has come from pricing, and about 95% growth in developed markets. So absolutely, pricing has been the key factor that's driven growth over the last 3 or 4 years. But we're now in a period where consumer confidence is low. Most FMCG players are reducing their 2025 forecasts. And so I think it's a challenging period. Add on top of that, massive changes in shopper dynamics, shopper behavior, local brands going back to winning, purpose-led brands winning, a change in the way we shop. So, we've gone from hypermarkets to e-commerce to, I think very, very shortly, e-commerce being the the leading, let's say, new channel or new retail environment. So it's a tough period for big companies. Small companies are doing great as long as they've got the right products. And I see that across the board, right? I've been working with various large blue chip companies over the last sort of 12 months. And they're all seeing similar challenges in the market space right now.
What's e-commerce?
E-commerce, honestly, I think it's the most exciting thing that's happening in our industry right now. So e-commerce is AI or agentic-led e-commerce. So it's a completely new way of shopping. I think we spoke about it just before the podcast, right? You can actually now type into a platform that you want to buy a pair of sneakers at X price, this color, this size, from a retailer with a delivery standard of above 95%. And you can limit the price, and that platform will actually go and buy the product for you. It is going to transform the way people shop, the way people buy, the way people research. I think it will transform how products are manufactured, right? All of a sudden, you will have a forecast of demand put into these platforms. So it's going to completely change the way certain categories get shopped and operate over the next 3 or 4 years as this grows.
Yeah.
Probably, again, another podcast, Daniel.
No, actually, I was going to say we've recently covered that in quite a lot of depth in a couple of episodes. One that we did with Amazon Web Services and Spotify, and another one with Chalion. I'll also leave them in the show notes because, yeah, it is interesting the impact that AI will have on product discoverability. I mean, super relevant. And these episodes are, I'm biased, but it's actually true. They're really, really good. So, and regarding pricing, I mean, I know that you've personally called it the lazy growth lever in FMCG. I would see why, but why do you say that?
Look, I say it because I don't think it's worked for big companies, right? Big companies now are losing market share for the first time ever in the last 20 years. The top 50 FMCGs are collectively losing market share. I think shoppers are turning away from brands. I think pricing has started to price people out of the marketplace. And I think there is so much opportunity still on the table within companies that to just go and take pricing leaves, in my opinion, just makes you a little bit lazy. I think there are opportunities out there that you can go and create more value for your consumer or shopper at the existing price point and still grow your business in a healthy way. So it's me being provocative as well, I think, but
we like that.
I think there's so much money on the table. That's the point for me.
Yeah, a little bit provocative, but on the other hand, I wonder really, you have these big companies, right? They are quite sophisticated. They've been around for a minute. So I wonder, in your point of view, why do they just default to pricing?
I think it's easier. I think we've had a lot of cost pressure, right? We've seen costs growing as a result of COVID, as a result of unfortunate, political events that are happening around the world. And so I think as costs have gone up, as shareholder pressure has increased, pricing helps maintain market share. It also helps the bottom line. And I'm not saying it's easy to do. It's actually really hard to do really well. But, driving distribution, execution at point of sale, the right innovation, the right communication requires capability, effort, diligence. And sometimes it's harder to do than really just going, okay, 6 points of pricing this year, inflation is 5. I also think RGM as a function, right, has really grown a lot over the last 10 years. Has really brought pricing and the opportunities to the forefront, probably the expense of other growth levers. And so I think leaders default there because it helps top line, helps bottom line. It's relatively easy to do. And it's very much, I think, in everybody's eyes right now.
Like also continuing on the provocative side, having been in the FMCG industry for some time, do you think the fact that we've been looking at value share instead of volume share for quite some time was also like a big risk that no one saw?
Yeah, absolutely, right? Absolutely. My thing that I've always said is every year, so I've been in sales in FMCG for nearly 20 years. Every year, I've pretty much been asked to take a price increase ahead of my salary increase. At some point in time, I will not be able to afford the products I'm selling. And volume at the end of the day is the healthy growth mechanic that we should all be striving for.
What risks do you think? I mean, taking the lazy solution is never a good idea in the long run. But what explicitly are the risks that brands face when they lean too heavily on pricing as their primary growth driver? Which I feel like with the inflation during and after COVID, that's been like really the only way that a lot of FMCGs have grown, right?
I think they risk volume loss, right? They risk alienating shoppers. They risk people trading down, trading out. You've got that fantastic retailer in Spain, right? That's opened up their own label,
Mercadona.
Business. Yeah, Mercadona, which is absolutely flying. People are trading retail channels. They're trading to different pack sizes, and so I think you risk volume loss. I think you risk brand equity destruction, potentially if you price the wrong way or too high. And I think the other thing that we're seeing is it's opening the door for loads of new brands to enter, which I actually think is an amazing thing as well. I mean, consumers have more choice, more options on the shelf, more relevant variants. But as a big brand, that's not what you want to see. And if you look again at that share loss that's happening globally, it's not happening to other big companies. It's happening to local players that are opening, launching customized brands for a specific country. And so I think, brands risk that when they take pricing in the wrong way, because I'm not saying don't take pricing. That would be ignorant. But very much you've got to take pricing in the right way.
But it's been going on for a while, right? Because again, if we take kind of like a COVID as a milestone where things turned upside down and then we saw this inflationary environment, let's position it that way. But do you see any kind of like examples where you think that the price increase have led to more like long-term brand erosion in your point of view, or like pushback from retailers even?
Look, I think there's a ton of examples, right? If you step outside consumer goods, Uber, Grab, Lyft, they're amazing examples where, you can enter now a service economy, and they launched because they were cheaper. Airbnb as well, right? Versus hotels. It's a cheaper alternative that puts more volume into the marketplace. And so you can see it in total industries. In terms of consumer goods, right? I think Sensodyne UK, that's a pretty famous case study right now around their price increases they've taken recently and how that really alienated shoppers and retailers stopped listing the product for a period of time. And the other thing that's really winning, especially in the beauty and skincare space right now, are dupe brands. So, brands that are able to manufacture at almost identical quality, just don't have necessarily the premium brand name behind them, but are able to sell at, half the price or less in some cases. So there are a ton of, let's say, risks, right? And examples where it's not working, but there's also a ton of examples where companies are able to launch and be very, very competitive. Dupe products particularly from a growth perspective at the moment.
Yeah, and you're right. Like you're talking about like retail attentions. Very famous case of Carrefour delisting one of the big food companies and like putting signs on the store of like, this company was delisted because they really put prices too high for our consumers. So obviously, I think that they took advantage of the situation to do a great marketing campaign for themselves. But it's true that it creates a certain tension, right?
Yeah, and it helps them develop their brand out as well, right? I mean, they protecting the people.
Exactly. Exactly. So if pricing is a lazy option, if we're talking about like how smaller companies, national, local companies are kind of like disrupting the big global players, what can these global players actually do? What strategic options should they be investing in?
So I'm not saying don't take pricing, right? That's the first thing. I'm not saying don't take pricing. I'm just saying take pricing in a smart way that is supported by your brand equity, by your activation, by your innovation. It's not just pricing for pricing's sake. There's got to be a reason for it. So that's the first thing. Is I'm not against pricing. Probably get run from the hills if I say that as an RGM expert. But as I said, I think there are a ton of opportunities that are still on the table, right? First of all, that shopper path to purchase and decision tree, that has changed a lot, right, over the last 20 years. Do we properly understand it? Do we understand where people are shopping, how they're shopping, the decisions they're making, and how do we service those decisions better? That's absolutely one thing that we can do. So do we have the right pack sizes anymore? Do we have the right flavors, the right variants? Are we distributed in the right channels, right? The growth of TikTok Shop at the moment, which is absolutely flying for some categories. They're all the big sort of strategic conversations we can have. Are we investing in the right things? Do any companies truly do zero-based budgeting and look at marketing and gross to net spend together? It's limited. But then there's all the basics, right? There's all the stuff that's not sexy, that's not cool, but in reality is the stuff that makes money. So do you have the right distribution? Do you have the right penetration? I saw a chart yesterday. The top 50 global brands have 20% penetration globally, which, for me is crazy, right? That includes Coca-Cola. That includes Nivea. That includes, huge companies that everybody think, you would know. It's 20% global, 20.7% global penetration. So it's mad. So I think there's the basics as well, and we've got to get the basics right. And companies have moved away from it because it's just not cool. But it's the stuff that pays the bills.
Yeah. No, 27% penetration. Just reacting to that, it feels like there is a lot of opportunity for growth. So it hasn't all been as saturated as you would think. And going back to the how brands grow, model, it's like, you can recruit a lot more shoppers probably. So I guess it's not all bad news. But have you seen any kind of company that comes to mind that has actually succeeded in shifting away from this pricing and more into the RGM levers and being able to work with mix or better execution, innovation?
I think there's loads of examples, Christine, right? That are small and happen, on a daily basis, where you make decisions around, okay, how am I going to rearrange my shelf so that I'm putting my higher margin products at eye level. So there's a ton of small examples where you see incremental changes on a day-to-day basis. If you ask me for a really big one, there's some cool examples, especially coming out of emerging markets like in Unilever with India. So they have a brand called Wheel, which is a detergent for clothes. And they managed to build out a massive network of micro-entrepreneurs, particularly female micro-entrepreneurs, that absolutely massively built their distribution in sort of non-covered rural areas, right? And so they've been able to grow distribution significantly through a completely new route to market model, rather than focusing on pricing growth. And so, can you shift away? And again, saying, okay, we're not going to not do pricing. It's just there is a lot of money still on the table to be had, and that's just one example of it.
Do you think that companies can reinvent themselves in a similar way in developed markets, Europe, North America?
It's a tricky one, right? It's more difficult. Don't get me wrong, but I do think, again, right innovation, right pack sizes. Why are these small companies winning? What are they doing differently? Yes, speed to market is different, but they're also understanding new generation shoppers better. Mm-hmm. They're launching brands that have purpose and that have, again, the right flavor variants, the right formats. A great example here in Brazil sun care. So sun care as a category, you can imagine it in Brazil is pretty big. What's growing in sun care here is not the big brands, it's the small brands, and it's around a specific format. So they actually have a format that comes in a version of a stick that you can pass on your face, a bit like a stick deodorant. But it means you can carry it around in your bag. It fits in your pocket. You can use it 24/7. It's primarily for your face. The growth is coming behind a new format. Big companies have to learn to be more flexible with their supply chains to be able to launch this type of product, right? So this format's been on the market now for 2 years. I could tell you all the big companies here still do not have a stick format sunscreen.
Interesting. So you're mentioning how pricing has been the lazy strategy. However, you started a revenue growth management consulting business. Like, maybe it would be good to understand the difference between revenue growth management, pricing, and why you think that revenue growth management can be a catalyst for more sustainable structural growth instead of like this more like short-term tactics that we've seen.
Yeah, it's probably a bit dichotomous, this, but Christine mentioned at the beginning, the definition of revenue growth management, it's in the name, right? It's revenue growth. And there are tons of ways to get to growth. And so if you take the definition as revenue growth management is being operated today, pricing, promotional ROI, yes, you're going to look at that. But as we've said, there are a ton of other opportunities out there that for me should absolutely be included into the concept of revenue growth management, right? You can talk about promotional ROI in terms of, positive or negative, but you also want to ask the question, why am I doing that promotion? Working with a retailer here in Brazil, they run promotions on infant formula. Any of you who've got kids out there, my baby only drinks one brand of infant formula. She will not try anything else. So why are you giving me a discount on infant formula, especially if it's not a volume-focused discount? Because also my baby doesn't consume more milk if I have more at home. That doesn't make any sense. Yes, the promotion had a great ROI, but I bought that product. I bought 6 of them and I won't buy for another 6 months. So for me, the definition of revenue growth management has to be a lot broader. We've got to look at our spend on field force, right? It's like 5-8% of our cost. We've got to look at all of our gross to net, not just promotional. Like, we've got to look at retailer media. We've got to look at install PRSM. We've got to look at trade terms. How do we make all of that more efficient? And so revenue growth management for me is not just pricing and promo, which is kind of where I've seen it focused over the last 5 or 6 years a little bit.
I love the baby formula example. I think it's brilliant. And as I hear you speak, Mark, and I'm reflecting a little bit, ultimately, it's like we've been pushed to face the problems or the challenges that have existing for a long time, like working in silos, managing the short term versus the long term. Who looks at what? How do I bring all this together? And suddenly it just has become an urgency to you need to get your teams together and figure this out because time's up. And I guess consumers are reacting. I mean, affordability for shoppers has been a really big issue. What do you see in that front?
They're voting with their feet, right? They're changing retail channels. They're absolutely, changing where they shop or being more choiceful about decisions they make in the store. Maybe they're not downtrading, but maybe they buy smaller pack sizes, consume less.
Do you see them dropping out of the category, or just is it more like frequency and volume going down?
Honestly, to be very transparent, I haven't seen the data. If you were asking me to put, bet my house on it, I'd say it's a frequency topic as opposed to out of a category. Right? It's really hard to drop out of a category entirely, especially
right.
now, right? You still have to buy toilet roll, but I think people do trade down. I think people do trade out. I recently So I'm a Gillette guy, right? I started my career with Procter. I love Gillette. It's, it's one of for me, the greatest brands that exists. I recently traded down from ProGlide to Fusion because it was 25% less per razor blade when I did the maths, right? And I'm one of those geeky guys.
The Gillette lab, they're now going downwards. Like, that's a big
exactly.
thing.
Exactly, right? So I laddered down, which is not what they want to do. But that's me doing that. And so, yes, I'm a geek. I sat there and looked at the number of razor blades and said, okay, 11 for 25 pounds or 10 for 28. What does that look like? But, that's my personal example of me trading down a little bit.
Thanks, Mark, for letting me know there was a difference between ProGlide and Fusion, because I was buying both of them like one day in Norwich. I didn't realize there was a difference until now.
Opportunity for in-store education. That's what it is.
Exactly.
You need to get somebody from Gillette on the podcast next up.
Hey, if anyone from Gillette is listening in, please get in touch. We'd love to have you here. So kind of hinted it before when we talked about Carrefour, but obviously we're talking about the relationship between brands and consumers. But there's this big elephant in the middle, which is the retailer, which is where the consumers actually go to buy most of the FMCG brands. So what role do you see retailers playing in all this conundrum? And how do you think that FMCGs, we talked about one being delisted before, how can they partner better with retailers to find like common growth strategies?
First of all, right, I think retailers now sitting outside that sphere of consumer goods companies and being independent, actually, I can say retailers do a pretty good job of protecting consumer values, right?
Who would have told you? Who would have told you, Mark?
I know. I've been brainwashed for the last 20 years. But I think they do actually do a very good job of it. And so I think, especially against absent-minded price increases, I think that they're very, very pro that. But how can you partner better if that's the question? Again, there is value everywhere, right? Out of stock, on-shelf availability is, probably still the single biggest opportunity for every company globally. So how do you get out of stocks better? How can you find efficiency in logistics between, different warehousing, different pack sizes to get on shelf to enable distribution in smaller stores? There is a ton of opportunities, and I think retailers are absolutely open, especially bricks and mortar ones, to partner with you around that space, because they've obviously been losing share over the last sort of 10, 15 years in the e-commerce space. So I think retailers are more open than ever to partnering with consumer goods companies to find joint value. And as you said, for them, it's great propaganda if they can, not pass on a price increase and make a bit of a song and dance about it. So, I think, engaging in positive, open, value creative conversations is now on the table for both sides.
Yeah, you said just trying to figure out like how this whole thing can work for retailers now, right? So going back at the beginning of our conversation, you mentioned like, okay, costs are going up and there is a lot of shareholder pressure as well. So with regards to the mindset or how a company needs to operate and kind of like handle this internally, what do you think is needed in order to be able to unlock this part and say like, I will go beyond pricing?
Back to shopper understanding, right, Christine? So, pack price architecture. Do you have the right products to put on the shelf? Can you simplify your portfolio? So how do you streamline that? If you've got 1,000 shops and you've got a product in every shop and every product is worth $10, that is $10,000 worth of cash flow. That's a significant amount of money that's held up, and again, high inflation, so high interest rates. What's the value there for the retailer? How fast can they sell that product and turn it? So again, if you can have smaller, more condensed portfolios that are shopper specific, you can really generate value without having to pass on pricing. You mentioned shopper education at shelf. So how do we better educate shoppers to trade across? How do we show them the benefits of new innovations? How do retailers bring products from all around the world, right? That's been one of my biggest pleasures working in this industry is, we were talking about travel expenses just before this started, has been the travel I've had a chance to do. And there are so many amazing brands in so many countries around the world that aren't available everywhere. How do retailers bring these brands in to bring more shopper choice and variation and opportunity? So I just think there's still so much money on the table that the pricing just doesn't need to be the only lever that retailers and suppliers pull.
So what you're advocating for, if I get it correctly, is before going into the elaborate re-engineering of your value chains and trying to figure out how costs are going to be impacting, just go back to the basics, because what you're saying is not new, right? It's all the things that have been in discussion, but they never really are the focus because they're considered like hygiene factors, and you just assume they must be there, but you never really look at them.
Yeah, exactly, right. It's exactly that. And again, it's not sexy. It's maybe not the coolest thing to be banging on about, but I think with the challenge with the market right now and the inflationary pressure, now is the right time to start looking. Because we want to get back to that volume growth, and maybe it's me getting old. But execution was the focus, 20 years ago, right? It was, get the product on shelf, get it visible. Some companies out there still do an incredible job of in-store execution, online execution as well. Those companies still win, Coca-Cola, fantastic, right? Execution in store, always spot on. Guess what? Coke still delivering fantastic shareholder value. Not that they don't take pricing, they do, but they also do it backed up with fantastic availability, a very small portfolio, relatively speaking, right? You different pack sizes, but it's the same product. So yeah, that's what I would say. Back to the basics a little bit right now.
And Mark, you say it's boring, but I'm sure it's not. And you've also made a personal commitment to RGM by starting your own consultancy in this space. What are you most excited about when it comes to RGM and commercial growth?
Well, we spoke about e-commerce, right? I think e-commerce is hot off the press at the moment. I think that's going to change the way we shop, and there's a risk there that it leads to a race to the bottom on pricing. So how we manage that carefully is going to be really interesting. But for me, the biggest thing and where I'm really focused is the amount of data that we have now available to us is so vast, so huge. But companies don't do a great job of bringing it all together. So how do we do a better job of bringing together my sales out data, my market share data, my sales in data, my execution data, to be able to identify those insights? It's really difficult to do. I'm not saying it's easy to do, but I think RGM teams can really help drive value in that space because just the amount of data we have is fantastic.
Mark, I think we've discussed so many things today, all super interesting. I wonder, if we were trying to put you on a challenge to kind of put it all together in a very simple way. You have a 1 minute elevator pitch to a CEO, and you need to convince them now, okay, you need to rethink your pricing first strategy if you want. How would you go about it?
Well, elevator pitch. I should be good at this as a sales guy, right? Look, I think first thing, have you really got all your other opportunities off the table, right? Do you have distribution at 98% or at your target? You executed 500 displays last year and you paid for 1,000. Well, where's that money gone for the other 500? So that's the first thing. Have you really looked at all your other opportunities? I think the second thing, absolutely. Do you have the right effective promotional strategies, right? We spoke about the infant formula example. So really asking the question why around the activities you're doing, the promotions you're doing before you get into pricing. And then I think the last one is, okay, what does your brand stand for? What's the brand equity? Does it support the pricing? What do you want to be known for as a brand? And I think if you ask those three things, opportunities elsewhere, why am I doing the things I'm doing? And does my brand equity support it? You'll be able to decide what type of pricing to take.
This was Mark Jagger. Cristina, we didn't ask him our famous question.
Yes, what is the one advice he would give his younger self? But why didn't we ask him?
It all has an explanation. We already asked him in his last appearance. So on the show notes, you'll find that if you want to find it.
Good. It was really good conversation, actually. It was, I was thinking that it was very close to a lot of conversations I've been having with people in the real world outside the podcast.
Well, that's good. And why do you think that is? I mean, what were your key learnings, takeaways?
Well, I think it's quite clear that in the past years, again, with COVID as kind of the milestone, pricing has been the dominant growth lever for FMCG companies. But it's becoming unsustainable in a way and also potentially damaging to brands. We had also this discussion, which I think was quite interesting now with Mark, on how big FMCGs are, like, to a large extent, losing share to other smaller companies.
What else? What are your other key takeaways? I mean, we have that part, but then, what other, also I think the difference between revenue management and pricing is an interesting one because it's not always understood, I think. Or is it just a conception of the same thing?
No, it's not a conception of the same thing. Growing revenues, first of all, the first part that you have is volume, right? When volume goes up, revenues go up. Like, assuming that you're not doing something really, really stupid. Then you have all the other stuff that can grow your revenues. And within that, you can also find pricing, but it's not the only thing, right? So what I really loved about Mark is that he didn't come up with anything super complex or saying like, okay, here are all these new techniques and all these things. Like, there is data and of course you need to use it, but ultimately there are the basics. And again, going back to Byron Sharp's book on how brands grow, right? You need to make sure your brand is physically and mentally available. So do you have the right distribution? And for me, and I would love to see more of that data. Mark mentioned the top 50 global brands have only 27% penetration. But it's super low. And that's very exciting because it means that there is a lot of more stuff that you can do on more of. Yes, you have all these hygiene factors, which used to be the prevalent way of doing business and have kind of like gone on autopilot in the past years. So we need to resurface this and make sure that you go for excellence in execution, to take your checklist and do everything properly first, and then also talk about pricing.
I was also thinking like revenue growth management, and I remember we talked about it with Nikitas from Bayer as well. It has all this data component to it, which I think is super interesting as we transition into this like e-commerce, AI-driven commerce. To like be like data first, I think will be pretty important as well to understand, I think, to position your products in the best way.
Yes, is the answer, of course. Though I would also argue, like, let's not forget that these new trends and the buzzwords that we have are very important, perhaps already for some of the categories. But all in all, in FMCG, e-commerce even is not that big yet, right? So there is a lot of stuff that you will have to do there, but there is a bigger, more urgent need to manage how you do business with retailers because, yes, for the next 5 years, people will probably still go to Tesco and Carrefour, and you need to figure out how you're going to manage that side of your business while in addition taking care of all the new exciting stuff and making sure that you don't find yourself down the line in a position where you're not able to cope with the new. But you cannot, just say we're transitioning now, so let's forget one and go for the other.
You have to be future ready, but you still have to you have to be realistic as well, no?
Fantastically put. Yes. Be future ready, but also make sure you do the work now for the business that you have now.
Thanks, Cristina. I'll leave the episode here with the nice words that you've dedicated to me. What a better way to end the episode. Thanks so much. And thanks to our audience as well for tuning in, and we'll see you in the next episode of the FMCG Guys. Have a great one.